Initially, because trading is very psychological, I would recommend going first part-time. Because if you do it part-time, what happens is when you take a trade and you have a larger enough position where it's like you have not a 2:1 or a 3:1 or 4:1. When I say 4:1, I mean risk to reward, right? You're risking like $100 to make 200 or 300 or 400. Now the mentality in the market is, well, when I trade Forex, I want to turn my amount into exorbitant, like this amount right here is going to make me rich. This one trade. And the idea is, well, do you do that when you buy a house? Do you do that when you buy anything else? Like when you buy a cell phone and you're like, okay, now I want to sell the cell phone. What, you're going to make 200% on that cell phone? It's not possible, right? So you can find those edges where you can manipulate the market and be like, I found that moment where I can make 200%. What the average numbers are 100% on average, or less than that, which is 0.8 or 1:1. And that's not a bad number. That number already is beating the banks. But people don't look at it. They look at, oh, that's too low, right? And that's the wrong mentality. You need to be okay with that and first start with a wider stop loss, a decent take profit, which is close to 1:1. Start part-time, and once you're in a trade, and if there is a day in between where you have to step away from your computer, sleep, and come back, your mind is not the same anymore, which is you're more calmed down. If you're there live, you're going to mess with that trade, you're going to turn it into a loss. So you have to let it go. In the beginning, trade part-time until you build that instinct of, I need to be patient. Because we all come from an industry where action produces results, which is, our grandparents, our mom and dad always telling us, you need to do something to expect results, work hard. So everything in our mind is, if I don't do, I don't get. So it's very difficult for us not to do if we're full-time traders. It's like, so you're telling me I don't do anything right now, and that's going to be more profitable? Like it almost sounds idiotic, right? But it's just we're trained that way growing up in the corporate world that we must do to earn. Meditation was my key. I used to be a very aggressive person, where little things used to upset me and get angry, and just doing some self-reflection and knowing when the situation comes up, how do I react, how do I handle it, right? Stuff like that started applying to me in my trading as well. It's like I see the setup, but I get some kind of feeling that there's something wrong in this trade. Do I ignore it and say, what's the setup anyways, just hit buy? Or do I say, if you're feeling something wrong, just step back. It's okay, step back. What are you going to do with the money if it's going to be a loss? Step back. So then I was able to overcome my greed and work with fear as well and make it a balance. So, but initially it was purely fueled by greed when I started the market. It was just like everybody else. I wanted to make the most amount.
Most people do the same thing.
I'm a pretty easygoing guy in general. And, at that point I've always diversified my income as well, by the way. This is another important thing. So, in every professional trader I know, at least, we all take money out of our trading account at a certain point. This is another part of money management, because the markets are always risky, right? We can never eliminate the risk. So once we build it up to a certain point, then we'll take a percentage of those profits, get it out of the market, and put it into something else to diversify even further. So I've got investments in real estate. I invest in other businesses where I'm a passive investor in that business, and different things like that. So, account goes down 15% overnight. Yeah, that's not fun. But hey, I got all these real estate holdings. I'm invested in these other businesses. So it's like, I'm still gonna have a good year financially overall.
In the old days, I had a guy who used to finance me, and he was a pretty wealthy guy, American chap, and he would allow us to trade pretty big. These days maybe it's not so big, but we had some good 5, sometimes 6-figure daily swings. Although I found that very stressful, even though it wasn't 100% my money. But I guess that that made me in the years after that, I would reflect and think, wow, you just can't do that every day. And that was very, very stressful. I used to go home, sometimes just sit in the dark, stare out the window, think, right, how the hell am I going to pick myself up and go back in tomorrow and do this all over again? So I couldn't do that now. Definitely not. That's for young men.
So basically, you just keep going whenever you have a series of losses, right?
You've got to. But that's the key. When the losses are small, if you're risking small and you might lose 150, 200, 300 pips in a row. Well, if it's a small amount of money relative to, and if it's small enough that it's not hurting you, that you can go to sleep at night and think, hey, it doesn't matter. I can battle on tomorrow, and if I lose a bit tomorrow, hey, it doesn't matter. You've got to get into that mindset. As soon as your stomach starts churning and you can't sleep and you're waking up in the middle of the night, you're on the wrong side of it.
My wife's going to kill me. She hates me telling this, but if I have to put the success, call it blame, if I blame anybody for my success, it's my baby, because for 7 or 8 years, the first successful year was 1987, sold the legal practice in about 79, 80. So that period, that 7 or 8 year period, the only reason I kept afloat, because I lost about 750,000 Australian dollars. Now, you're talking a couple of million nowadays in today's currency, that was 19. She was the one that supported us, and I'm basically got to really understand what trading's all about, the probability and so on, when I did a course with Pete Stettelmeyer in Chicago. And she was the one that funded that, and she was living on $25 a week. So I tell you asked me how I turned it around. Firstly, you need the support of your wife, especially someone like Chrissy. Yeah. And then I think I came to realize, and that's what Pete taught me, that it's not about patterns. It's about the psychology of buyers and sellers. And yes, the profile is something that will identify that for you. At least it did for me. But it's always about the psychology of the buyers and sellers. You've got to get in there and say, what is this chart telling me about whether the buyers have exhausted themselves, or whether the sellers have exhausted themselves, or we're trading a value area where, there's fair price for both parties. And I think that, to me, was the key. My understanding of the markets came from that idea.
In
the first 9 months, I didn't do very well. Certainly not as well as I had hoped, and was able to turn it around after that. But in the first 9 months, I'd lost a decent amount of money. I was in a hole with my firm, and I needed to turn it around. I do think that 8 months, 12 months, and 18 months are very good lines of demarcation for people who are new and developing as traders. In the first 8 months, you really should learn whether or not the style of trading that you're employing is best for you. Is that going to be your niche? You really should learn whether or not trading is something that you have a passion for. Lots of people say, I have a passion for trading. This is what I really want to do. I sit in all those interviews. Nobody comes in here and tells me that they kind of are sure that they want to be a trader, but they're not so sure. So they all say, this is definitely what I want to do. Give me a chance. I'm going to be the best trader you have on your desk. They all say that. But you're really not going to learn whether or not trading is your passion until you actually start to have to do the work that goes into improving, to start to do the AM preparation, start to do the weekend chart review, to start to do the daily chart review after the close, to start to do a detailed trade review. So you do a playbook trade of a setup that made the most sense to you, that you're archiving, so you're building your business, so that you're watching back tape of a trade that you think will repeat in the marketplace, so that the next time you see it, you trade it better, you trade it bigger, you trade it more proficiently.